All right. Welcome back, everybody, to another deep dive.
Yeah, glad to be back.
Today, we are going to be looking at 4 stories, all coming out of Singapore.
Sounds good.
We're looking at 3 different companies and the overall Singapore growth forecast.
Looking forward to it.
So we're going to start with Thai Beverage. Thai Bev, a lot of you probably know them.
Yeah?
Their latest earnings report showed that they only had a 1% dip in profits,
Wow.
which, considering rising costs, and
Yeah.
consumers maybe being a little more wary these days, that's pretty good.
Yeah, that's pretty impressive, actually, especially in this current economic climate.
Right.
With inflation and all. A lot of consumer goods companies are struggling.
Yeah.
So for Thai Bev to only see a 1% dip, that really says something about their resilience.
Yeah, it makes you wonder, what they're doing right.
Exactly.
Maybe, smart cost management, or maybe they've got like a really strong brand loyalty.
Could be a number of factors.
Yeah.
Diversifying their product portfolio, focusing on premium brands, perhaps they're expanding into new markets. These are all strategies that could be helping them stay afloat.
Interesting.
Yeah.
And their share price actually only dipped slightly as well.
Okay.
Just 1%, or 0.005 to close at 0.515 cents.
Makes sense. The market often reacts, in a way that kind of suggests they expected it.
Oh, interesting.
If they were expecting a larger drop in profit,
Right.
and then it only turned out to be a 1%, that might actually be seen as good news.
Yeah.
And hence, the small dip in the share price. It's all about expectations and how the actual results measure up.
The psychology of the market.
Absolutely. The psychology of the market plays a huge role.
Fascinating. Okay, well, next up we have BRC Asia.
Okay.
They are a steel solutions provider.
Interesting.
And this is where things get really interesting. Their profits actually jumped 11%,
Wow.
but their revenue declined by 21%.
That's a big difference. How is that possible?
So the question is, how is that possible?
Yeah, how do you have such a big jump in profits when your revenue is going down?
Well, one of the possible reasons might have to do with this softening demand and lower steel prices that we've been hearing about.
Okay, I see. So the steel market is in a bit of a downturn right now.
It seems like it.
Globally, there are a lot of factors at play. You've got, construction trends, you've got global supply and demand dynamics, and of course the overall economic outlook.
Yeah.
All of these things have an impact on steel prices.
Interesting. So how does that tie into BRC Asia's increase in profits?
Well, it could be that they're strategically shifting their business model. Maybe they're focusing on higher margin products and services. Instead of just selling raw steel, they might be providing more customized steel solutions.
Oh, okay.
Things that require more expertise and therefore command higher prices.
That's interesting. So even though they're selling less steel overall,
Right.
they're making more money on the steel that they're selling.
Exactly.
And despite that revenue drop, their share price actually went up.
Interesting.
It rose by 0.02 cents, or 0.8%, to close at EGO $2.39.
Wow. That suggests that investors are looking beyond the immediate revenue figures.
Okay.
They're seeing the potential in BRC Asia's strategic shift. They're betting on the fact that even with softening demand, the company can maintain profitability by focusing on higher margin offerings.
So they're kind of looking at the long game then.
Exactly. They're not just focused on the short-term fluctuations. They're looking at the long-term potential of the company.
Very interesting. Okay, let's move on to our third company, Lumchang.
Okay.
Now, they've made a decision to list their interior design business, LCI, on the Catalyst board.
Interesting.
So the question is, what's the strategy behind that move?
Well, spinning off a part of your business and listing it separately can be a smart move for a number of reasons.
Okay.
For one, it can unlock value.
Oh.
By listing LCI separately, Lumchang is essentially saying, hey, this part of our business is valuable on its own. It has its own growth potential, and it deserves its own platform.
Okay.
And by listing it on the Catalyst board, which is specifically designed for smaller, high-growth companies,
Yeah.
they're giving LCI access to a pool of investors who are specifically interested in that kind of company.
So it's giving them like room to breathe and grow on their own
Exactly.
without being sort of overshadowed by the larger Lumchang.
Right.
Interesting. Now, before this announcement was made, Lumchang's share price closed flat at 0.305 thalents.
Okay.
It'll be interesting to see how this spin-off affects their overall stock performance in the coming months.
Yeah, it's definitely something to watch. Will this move the needle for Lumchang stock?
Right.
Only time will tell. But it'll be interesting to see how the market reacts.
Definitely. Okay, now let's zoom out and look at the bigger picture here. Singapore's economic outlook.
Okay, sounds good.
The government has actually revised their 2024 growth forecast
Oh, really?
upward to around 3.5%.
That's good news.
It is good news.
Especially with all the global uncertainty we've been facing.
Yeah, absolutely.
Hmm.
However, for 2025, they're being a little bit more cautious.
Okay.
The projection there is a little bit wider. It ranges from 1% to 3%.
I see. So there's a bit more uncertainty about what's going to happen further down the line.
Exactly, exactly. So the question is, what's driving that uncertainty?
Well, Singapore's economy is very closely tied to global trade and finance.
Huh?
So any headwinds in the global economy are bound to have an impact on Singapore.
Right, makes sense.
Things like inflation, supply chain disruptions, geopolitical tensions, all of these factors can create a lot of uncertainty.
Yeah,
And it's difficult to predict exactly how these factors will play out in the coming years.
that's true. And how might all of that affect the companies that we've talked about today?
Well, that's the big question, isn't it?
Yeah.
Companies like ThaiBev, BRC Asia, and even Limchang with its newly independent LCI, they're all going to be affected by these global trends. They'll need to be adaptable, and they'll need to be strategic in how they navigate these choppy waters.
So their future success really depends on their ability to not just react, but to anticipate these changes and plan accordingly.
Exactly.
This has been a really interesting look at how these seemingly separate stories,
Yeah.
ThaiBev's profits, BRC Asia's steel, Lumchang's spinoff, all tie back to the larger economic picture.
Absolutely.
It really highlights how interconnected everything is, both within Singapore and globally.
Couldn't have said it better myself. And I think that brings us to a really interesting question for our listeners.
Oh, okay.
How do you think these individual stories are going to play out within that larger narrative?
Hmm.
What opportunities and challenges do you see for companies and investors as we move forward?
Great question. I'd love to know what you guys think. Let us know.
Yeah, let us know in the comments.
This has been another deep dive, and we will see you next time.
See you next time.